Dum, dum, dum. Oh, wait. There you go. Got to do the intro video. What's everyone up to? Anybody out there? Let's see. Been noticeably more interest online today. Makes me wonder if everyone just waits for the price to go up. I guess that's the way it is, right? Price go up, people's interest starts to appear. Price do nothing. People nowhere to be found. Right. Well, let's have a bit of a look. So yeah, if the price stays up, there's a lot of structure, a lot of support structure that will start to get created if we stay at these sort of prices. So that's good. Not necessarily, higher highs or anything, but just more confluence that the price wants to head up to these sort of levels. But the fact that this could get created tomorrow also says that it's probably not going to happen today, but we'll see. They can pull it all the way back and stay above 66 and then bounce up again after that. Let's look at tomorrow. Really? It's tomorrow Prime Day. Oh. Well, that's going to be fun. Okay. Maybe we do get a bit of chaos tomorrow. What we do yesterday. It's not a perfect close. It would have been a little bit better if it was just slightly higher out of there. But not dreadful. What do we got? What do we got? Hello, good morning. Big question. Where are they going to reject? Nothing too special. Looking at where is it? Some ARC stuff. Let's see. Actually, not that one. I want this one. Yeah, just watching some of these levels. Areas like that. So 0.0313. It's not on the charts. Actually watching this as well, but that's bigger. Yeah, just looking for something like an entry down in here. Move back up to here. Also posted this the other day because, or today actually, posted this today because I was just looking at the trends on Sol BTC and they just didn't really look right. So I just refined them down from a 4-month down to a 1. And these appear to be considerably more accurate, which might mean we actually get a trend bounce. If we come down here, it's the perfect month for it to retest the hard close break level and hit the trend at the same time. So I was looking at that thinking, okay, so maybe it's this month. Which way first, don't know, but down here, bounce, decent momentum after that. What else was I looking at? This just seems to want to break, but it hasn't. Good day. Good evening. Watching Sol for some of yesterday's closes. So created. Yeah, just watching for this whole 85, 88, 87 area. Whether we get another bounce off that, like we did the previous day from 86, 84. So, yeah, watching these. Yesterday's closes, which might push us back up to a double top at 94. I don't think we've quite hit those yet. We've bounced off some fib levels. So we've got the same levels in the data file there. Those. But before we get to those, we have all of these. Even that. 15-day origin down there as well. So a whole bunch of fib brackets, which could send us up before we see the hold levels. See? This is 4. Hmm. Don't know. If we can close over that whenever the next 15-day closes. Where's that? Is that 5 days, 5 days and 15 hours. Yes, we've got to stay up here for a bit, really. The longer we spend up here, the more structure we actually start to create at this area, which takes time. So here's something interesting. Hold level turned into a reversed hold. Price closes back down below it. Now it's acting as a hold level from all the way back there. Oh well, it's got 15 days. Or 5 days. 5 to go. Ouch. Any thoughts on when and why? No. Um, the old thought process was that, and like the teachers from things like cotton candy is that a hold level only matters once, but I don't know. Now that I've got this, because you can't view this chart this way on TradingView. Um, Now that I've got this, I look at it and I go, these hold levels actually seem to be levels of support and resistance through time. So seems a bit weird to say a hold level only holds once, but exactly what makes it completely invalidated? No, don't know. Because the one thing about hold levels is they don't tend to appear on multiple time frames at exactly the same price. It does happen, but it's not really common. So it's not like break levels. Break levels are going to be the higher or lower of a candle, so it's quite easy for them to appear across lots of different time frames. But yeah, hold levels are the exact price at close or open. So yeah, it's a bit different. They tend to be more unique prices. Oh, let's see. So there's quite a few there that are the same. Two different time frames with the same hold level. So there's probably something. There's probably something in it to do with um, whether or not they have all completed. Like this hold level here, which exists on 3 different time frames, has played out as a trade on 2 of them, but not on 1. So it could be similar to break levels, where it has to be broken on every single time frame, otherwise it can be recovered. So 2 have, 1 hasn't. Maybe that means that that still has a shot at rejecting 1 time in the future. And so you might be watching a daily chart and think, yeah, hold level's already been hit, it's already completed its trade, and then it hits it again and it goes for a nosedive because it also existed, on another time frame. So maybe. Probably have to go down another rabbit hole now you've asked that. Yeah, but they do tend to be unique. That one appeared 3 times. All done. So here's a level like, what was that there? Same hold level, 2 time frames, both shorts, one complete, one not. So it might look like that hold level operates a second time, but it actually could just be that time frame. Yeah. I guess we'll know if the price ever gets back to 214 and 43 cents. Hey, finally caught a stream. Yep. Trend, hold, fight. Middle of nowhere. Middle of nowhere. Trend. Not quite hold. Range level. It's hard to see this really having that much of a pump. Where you got all this big stuff here, it's got to find some kind of horizontal support just to get through this trend. Hey. It's not ideal if it closes the week like this. Zeus is seriously. What a filthy token. There it is. Bounce, 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 bounce. Origin. Boom. Volume. Crypto market cap data. Like overall crypto market cap, yeah. You can view it in a lot of different ways. You can get total, which includes all of the stables and everything. So you've got lots. Oh, excuse me. Really nice peach apricot vodka. So you've got totals. I don't tend to look at this because there's like historically stable coins, the only reason they really existed was to go in and out of risk assets. It's not really like that anymore. Now people actually just use crypto rails for payments and credit cards and all sorts of things. So that's where more things like excluding stables I tend to use. Via an API. No. So TradingView doesn't have an API anymore for normal use. It probably does, but I'd say it's really just for major institutions. What you can do, you can set up. So there's a few things you can do. So you can either download the CSV file, so you can go in here and you go download chart data. But of course, you'd have to do that on a regular basis and keep updating. Total ES has a bunch of variations. Yeah. There's total ES, there's total 2 ES, there's all sorts of stuff. The other thing you can do, which takes a wee bit more to set up, is you can set up like an Amazon cloud server type thing, and you can put a webhook in it, and you can have a alert set on the close of, say, 1 minute candles, which goes to the web server and updates it with a real-time price feed of whatever the total is. Or you could set it to 5 minutes, 15 minutes. It all kind of depends what you're trying to achieve. And you could set it for daily, weekly, just whatever timeframes. But there is a limit depending on what level of TradingView you have, as far as how many alerts you can have, as from time frame perspective. But the alert goes to the web hook. It passes the candle information through, and then that gets picked up and can be converted into some form of API. So, like if you really wanted to get this kind of information, you would just do it by having like an Amazon cloud service set up with a Python script, and an alert. Yeah. And then it would just continuously feed the data through. That's pretty much the easiest way to get anything out of TradingView. It requires a wee bit, might cost you, depends on how much data you send through. If you're sending 1 minute candles, it's probably going to cost you quite a bit to run the cloud server, because it'll just constantly be receiving information every minute. But if you were doing it to try and locate 4 hour, 1 hour origins or whatever, it's only sending one alert every 1 hour with a candle in it, then that would be fine. And then what you would do is you wouldn't use it for a price feed. You could use something else for a price feed, but yeah, you definitely wouldn't use it for anything you can get off an exchange for free. Yeah, full of good ideas. I have one of those Amazon cloud servers. Yeah, probably could. I mean, TradingView is awesome, but it's mostly awesome just because of what gets fed into it. It's very limited as to what you can do with it, which I sometimes wonder if it's on purpose. I mean, the way that they aggregate candles, you miss out on about 50% of the trades you could take. They just simply do not appear. But what's worse is that some of the structure is so wrong that it's in reverse. So you think you should take a trade and then you end up getting wiped out. So yeah, the basics work. 1 hour, 4 hour, daily, weekly, monthly. You just might get smashed in the face by a 3-week which doesn't line up anymore when you think you're taking a weekly trade. Thank you, TradingView, for giving everyone a 60% win rate if they exclusively rely on you. Yeah, and you can pull a lot of tokens have a market cap as well. And there is also an index chart, which is kind of like an average across the exchanges, which I'd look at index charts sometimes. They tend to have more history. Yeah, all sorts of stuff. Just wondering if this dirty 4-hour origin level down here is going to have a bounce. Because that was kind of the first touch through here. That bounce. Sort of a dirty level because the price touched it, made an origin, bounced off it, went under it, even closed under it, but not a proper break of it because it's a yellow candle, and then did the bounce straight up into that reverse level. So that was the first trade. Yesterday. Yeah, it might still have another bounce in it. What BTC might bounce off, eh? Let's have a look. I mean, if it stays above 69k, it won't take long for this to flip back into some kind of support. It's a pretty key level, as far as you can see. And if it can close over that sort of 70k area, then it's crept back up through some origin levels that it's previously been stuck under. And then, of course, you just start to run into all this stuff, which is probably what it's fighting with now. All of this. Then after that, we have that break level to deal with, which don't know if we quite got to that. It's BTC. No, we never quite got to that. And then if it manages to get through that break level, we run into some absolutely stupidly high time frame fib levels, which are waiting. And then we move into a whole bunch of origin levels, which were support, which has been broken because we've spent a long time under that price. So probably check that one actually. 77. Okay, let's have a look. Oh, there it is. Okay. Yeah, so it's not completely broken. So 1, 2, 3, 4, 5, 6, 7, 8, 9 time frames. 27 and 32 are the two that haven't broken. So if we look at that, 27 days got 17 days left to get above it. And 32 days got 14 days. So yeah, that's that price level there at 76k is not technically broken on every time frame. So it might just go back up. Haven't broken the trend either. But we will run into this one at some point. Look, one day. Something's not right there. Okay. Pretty close. Yeah, pretty close to that trend. So if New York comes along and then sends us on a bit of a pump up into or through that trend, then rejects down. Welcome to high time frame trend line. Yeah. I mean, I would look at stuff like this, and the first thing you do is you look at how long does it have to go, which in this case is 14 days. So there's no reason why this candle can't just push up through that trend line. It's got plenty of time. Normally what would happen is it's either going to close over it or it's going to pull back before close. So it's yeah, time, unfortunately. So that break level there. So to break this break level, it kind of needs a trend. The only way it can really get a trend is going to be the top side of this trend. Hopefully we're not stuck here for another boring 14 days, but could be. Push up, reject back, open on the other side of the trend, dip down, push up, break the level, close over the level, go up to attack the trend, push up, stay over it for 14 days, use the horizontal to break the trend, possible, go up, reject, come down within 14 days, keep traveling down, possible. It's all pretty possible. That's a bit cleaner. Yeah, it looks like it should go up at least to 76. Yeah, this is just really clean, very hopeful, as you say. Just bounced straight off the oldest trend that it had, and the hold level is up here at 86k through to 87, 88, which I think ticks a lot of the boxes. You know, if we can hit those prices. BTC. So if we look at trades where we've exited the hold. So we've entered, triggered the trade, and exited the hold. This one. And then we look for incomplete status. This is growing, so we've still got this one short to 56. But outside of that, everything else in there is a long. Prices ranging from 75 being the next key area through to 99. So you can go through and look at all those charts and you'll find, something that leads you to these prices, and we are currently outside of the hold. So you just want to see whether you've closed the candle outside of the hold, and these really, really big ones, they probably haven't, just at 568 days, etc. They probably haven't closed outside the hold yet. But in 127 days they do. And that's about, sort of in there is about where we should start to see a bottom, DCA into a bottom, and then if it's like a normal cycle, and then that could be your next range for BTC for the next bull market. One of these becomes the range. It's just a case of which one. So let's look at 80. In fact, let's do it the other way. Let's go timeframes. Okay, largest to smallest. Then let's look at one that's about to close. So let's take 178 days, which closes in 9 days. Is that the soonest? No, we've actually got some that closed. Well, there you go. 117 and then 79. So let's look at 117 and 79 because they've got 79K and 77K targets. So let's look at those. So we would have closed this today. Yeah, they did keep it just under the wick, so not perfect. 79 looks like. $79 on the other hand in 3 days' time, if it doesn't drop back below 70K, it is completely outside of the hold in every way. So it's still under the break currently, but that shouldn't stop it. So yeah, that's a minimum move up to 77.7, completely out of the hold. 2 days, 15 hours. This is the kind of sneaky stuff that I've been playing at for a couple of weeks now before we saw this pump. They just keep bringing candles up out of the hold. And so that list of longs ranged from about 69 all the way through to about 73, 74. And of course, all those 73, 74 ones have now been completed. So if we looked at exit timestamps, so there's all your trades that were completed in that pump we had. So all of those. No, I don't think ranges do get invalidated. if there is a hard close below 0. So everything I've seen and since building this FibLab dashboard, no. I think they get invalidated if another range is created from a higher or lower level than them. So in other words, you can have a range inside a range, which can be smaller than the bigger range, but you can't go the other way. So you can't have a range form that's then bigger than the smaller range. At that point, the smaller range becomes invalidated. I think that is how it works, and we'll we'll keep digging on that. What we don't have at the moment is we don't have reverse timestamps when it comes back. So it's with that we can pretty much figure it out, I think. But we're also trying to figure out a whole bunch of other things at the moment to do with trends, because they're getting trends loaded, and if we can actually trigger movement from the timestamp of trend shifts, that's a game changer. Because yeah, most of the time price is not actually focused on moving between horizontal levels. It's usually moving between a horizontal level and a diagonal level, which is why flags are the most common thing in trading. So people always talk about, bear flags, bull flags. You've got, wedges, down facing wedges, up facing wedges. Everything is usually some kind of wedge or flag, but yeah, horizontal to horizontal is more like what happens with origin, and it's actually technically more like origin to break, but yeah. So yeah, completed a whole bunch of trades in the pump, having a little bit of a pullback, but if we stay up here long enough, we get to go higher, and all the structures there to go higher, and the minimum obligation longs are still there. In fact, there's more of them now than there was before, because we're pulling out of hold levels. So it really just depends on do we keep pulling out of hold levels? And then we're going to hit something, and we're going to reject, and then we're going to go down. And most of the confluence points to about 76 as a minimum scary level. So, because we haven't been to 55 yet, and we haven't been to 76 yet since opening within this bracket. So once we get up into here, or any higher than here, if we can't hold that, we come down to here. Right, what's Sol up to? It's just bouncing between range levels. So based on where they built those high time frame holds, which are just a little bit lower than where it's ranging now, it's probably going to get people induced, sweep liquidity, and then head up to 94, probably crystal ball, because they created all those high time frame holds down here, and they target up here. So the other thing, I mean, it could always do that, but I don't think the up is over yet. Probably not till we get up into this mess. And that's the main reason why we're doing nothing right now. Just we talked about that level yesterday, the 91.195, this one here, which is actually, I think, a 2 or a 3-day level. So that's we pull back in underneath it before we closed, which doesn't help. Sol. There's Sol. This one. So it's a 7-day break level. So it's not too bad because you got time to get over it. But it was a 3-day origin. And so that was going to reject. And we pushed up through it, ended up pulling back down and closing underneath it. It's not much of a rejection for a 3-day origin, got to say. But who knows? More might come. I wonder what that looks like on a 7-day chart. When's our next 7-day close? Two days. This is the kind of structure that's a wee bit damned. Be pretty hard to get out of this because you're going to get a range trend facing up and a hold level. So price is able to push up to a higher high and then dump back down to the hold level. So that could be a useful trade. It can go the other way too. So you could open the candle, come down to the hold, bounce up. But it's pretty hard to break up facing range trends because there's no way to actually, for this candle that creates it, there's no way for it to open the next one on the top side of it. So that's a bit of a future bearish sign. This is technically an in-range origin, so it could close, once it closes anyway. What they could do is they could close over 91.195, which means opening on the top side of the 7-day in-range origin, pump through that trend, pull back down within the next 7 days, dump all the way back down to the hold, and maybe break the hold, maybe don't break the hold. Hard to know. But there's what's the meme? Winter is coming. Something is coming. This is dirty, filthy structure. Something's coming. It's probably a trend break too, right? Yep. Ouch. Look how far away it is from the trend. Ooh. This could be dirty. Let's hope that is not the anchor candle. Let's see. Yeah. How does that work? Oh, oh, use error. There. Okay, good news. That's not the anchor candle. Well, this could be fun. 3 days. This if this candle actually breaks that range trend, it can really move. Like that's the kind of thing that gets you to 120 or 135. Yep. Because breaking that range trend would put it back inside that range as well. It's actually quite good structure. Gives them the ability to sweep and wipe out all the longs. But if they close above that, epic pump as well. Oh, maybe crypto won't be so boring in 3 days. What's everyone up to? 12 viewers. This is awesome. How do I best process all the timeframes? Well, it depends on what's closing. So the only thing that matters is where the price is at the time of close, and that gives you an indication of intention. So, and then intention gives you an indication of bias. So take this, which is today, 50-day time frame. If it was to close exactly like you see the price now, it's above the break level, it's outside of the hold. What you would also consider is things like this. You would go, and you always work sort of biggest down. So you go, okay, we never touched the hold. Now, what does that mean? That means we left that behind for some reason, but we're closing over the break, we're leaving the hold. That means we're probably going to go up, but they have left a target behind. Now, why would they have left a target behind? There's probably going to be a trend in here, and that's one trend. In fact, that is probably the trend, just because it's I bet you they're touching down here somewhere. Yep, so they're touching on the corner, so that is the trend. And what does that tell me? It tells me that they're pulling out of the hold. They're probably going to go up. They've left a horizontal target behind as the target for a trend. If they close under the trend, they're probably going to go up, push through the trend, and then reject down to the hold. And that's just the biggest time frame. So everything else that's smaller is just going to be something that happens within the overall move. The overall move is that they're planning to go up and then reject down. That's yeah. Auto trend tools. I've got auto trend tools for TradingView. They'll be part of the whole FibLab thing. Auto trend tools in this I've seen and they work. I've seen pictures of them a couple of days ago. So they're just not in this version that I'm using now. So just waiting for the refresh. Really hoped this had been out or would have been out, but yeah. So that's kind of how you. So the biggest time frame is basically saying pump up, dump down, and so that's kind of what you're looking for. And what you'll notice is that all these levels will have confluence. Like if we were to reject off that 77k level here, well, we've seen that 77k level already in this video or live stream, and we've seen it for other reasons. But this is the thing about how charts work. They can't all have the same point of support or rejection, or they'll all just look exactly the same. Like you can't have a hold level across every time frame that's going to support or reject price. But on one time frame, at that moment, there might be a trend. At that moment on a different time frame, there might be a range trend. At that moment on a different time frame, there might be a fib level. And at that moment on a different time frame, there might be the hold level. And when you start to see everything line up like that, you know, okay, this is what they're going to do. And that's it, really. And the rules around things like hold levels and trends and timeframes, there's no sort of exact way of figuring out how long a trade will take to play out. So I've done a lot of digging into that, and so it is actually about 50%. 50% of timeframes, say of trades on a 50-day time frame, play out within 50 days. The other 50% don't. They could take double, triple, quadruple. So there's no real way to actually figure out how long one will play out. It just eventually does, depending on what type of trade it is. So this is what I'd call trappy. So they're doing everything right to go up, but potentially closing just under resistance. But they're closing under the type of resistance being trend resistance that the candle can continue up and then come back down again. And if you look at, I'll give you some high time frame examples. The biggest sell pressure time frames that exist on Sol are things like 209, I think, 322, stuff like that. So here we are. No, I'm wrong. It's not 209. So maybe it's 322. Yep, that's one. So massive hold level, sending price to the downside, has a trend. Now the price opened on the top side of the trend, goes up into the hold level rejects the price. Price is now pushing down through the trend. So it needs to find something to send it back up. And that's when things like fib levels come into it. Because you've got this range from the downside here, which is horizontal support. So here we are at $73. We've got the 1618 of the range. Up here at 109, we've got the 2618. So just purely based on this and this alone, over a really long drawn out period of time, you've probably got, because big, you've probably got this level at 73 sending the price back to either the 109 or the 113 levels here. And back in this moment, if we look at that on a daily perspective, when it got created, because it wasn't a full wick engulfment. So at that point, the first resistance was here at 144. So if we look at that from a daily, we had a trend, we had price above trend, and we had a hold level. And I really should have hit that filter before I hit that button. Wait for the whole screen to go green. Waiting. Okay, here we go. One of the filters that they're hopefully going to add is a time current to back filter, so that it eliminates all this really old stuff which isn't overly important anymore. So that'll help speed things up. So there's your trade. Probably should have actually. Okay, let's go back again. 322. What we need to know when did that actually close. Okay, so it closed and opened on this candle. So this line here is the important line. And then we want to look at the 1 day. Okay, there's your trade. When the 1 day candle closed above the trend, swept some liquidity from down below, because it can. It could have spent 318 days down there and still gone up and done that. And then look at the dump when it hit that. That was running into a 322-day hold level. Hello, darkness, my old friend. So yeah, how do I take it all and put it all together? I look at whatever the really big stuff is, and I look at how long it has to go, and then I look at the small stuff they're creating and how long that has to go, and I tend to try to take trades based off 1 day, 2 day, 3 day, 4 day, 5 day, maybe 7 day trades. But I do them mostly, if I'm going to do them with a sizable amount of money, I will do them in the direction of what the bigger stuff is doing, because otherwise you're just asking for trouble. Like that. Trouble. How many people can tell you why we dump like that, other than what you just saw on this live stream? And it took 3 lines and 1 chart. You maker? Nursing jet lag with less than ideal coffee, new maker. Ah, coffee maker. Yeah. Checked it off the old break. So this is a this is 4 candles, 3 lines. 5th candle, trade. Bounce up, dump down. So the toughest part is that, this, I've never even looked at this on TradingView, but it probably looks totally different. So when you let's see, find a normal sol chart. So sometimes the time frames line up, and other times they just look totally different. Like there's no hold level there. That's your main problem. Is every single thing you see there says nothing's going wrong until it is. So that's the, what does that say? That says that closes in 8 months and 14 days, whatever that equates to. So nearer the end of the year. So that's probably about right. Now, if you just average it out, what's that? 8 months and 14 days. 19th of November, that closes. Let's see, does that line up? 240 days. What's 240 days? Let's average it. Yeah, it's about the same. So they're going to close the next candle probably around the same time, even though all the other ones prior to this have been different. Just shows you how screwed up it is. Right. Well, Sol's heading up a little bit. So might get a close over the 15-minute origin there. Up over the hourly. So this 97 level here, this is a untested broken level. That's on our chart as far as targets for trades as well. So we could be heading back up there. And what did we get? So what do we got? We've got 91, 94, 94. 91, 85. A lot of big stuff tomorrow. Or in the future, sorry, this is not necessarily tomorrow. Possible stuff for the future. Range. So 96, 142, 99, 103. It's pretty bullish. The close is pretty bullish. 105. See how much it continues. This pattern's a little bit hard to trust though. Normally they'd sweep this before that, unless it's trap shorts. Take shorts, go lower. Which lines up pretty well with all the structure. Get ourselves a few bullish closes, stay under trends, push up because we've got bullish closes, into resistance, dump down. Yeah, it can. The more leverage it's in the market, the faster it would tend to do it too. I mean, this kind of dump like this, a lot of it is about getting people to short here, and then it bounces back up, traps them down in here, and then they're underwater when the price, and this is what's really bad too, when the price comes down like this, a lot of these people that are trapped down here, they see the price falling, and by the time it's down here, they go, we'll add to our positions and bring our average up. And then, of course, it does this and just plays that nasty joke on them over and over until eventually their positions end up a lot bigger than what they wanted them to be, because that's just the way markets tend to work and what traders tend to do. They don't think to add to their short here, which brings their average into here, and escape here, and that's not really what happens. They don't have the confidence to add to their short until here, and then too late. You're now here with double the amount to lose, and it's back up here. Then it does it to you again just to troll you, and then it does it again. So, and then that, which would be putting all of these people in a world of pain right now. Yep, welcome to crypto. It's the same in every market, really, all this kind of stuff, but it's, so does it surprise me if we come up here? Absolutely not, because it's going to liquidate them. And then does it surprise me if it then does that? Absolutely not, because once they are liquidated, all of these people that have chased this long, they become the next victim. Targets are here. We have trends. We're pushing into horizontal resistance. We'll come back to trend. Just how high does it go? It's kind of why when you see price run away from a trend like this, you're always just better to wait for it to come back to the trend. Take your TP at whatever the first horizontal resistance is, or take at least half or some of, see if it continues. Because you never really know what level they will use to create the flag or the wedge. So maybe they use this hold up here. Maybe that becomes your flag. Pointier than that, but yeah, off the screen. Or maybe they use this, which was always a key support resistance level. So now you just take some money, take it there. And then if it comes back to your trend, it'll be higher than, say, your entry if you'd entered down here. And if you lose your trend, you get to keep what you had there and you don't lose anything from here. Now if it comes up, recovers, it keeps going, bonus. Take some of the next level. Do, 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 do. All right. You don't want to look at anything? There's not much happening. Kind of just waiting for this to come down to a key level. Waiting to retire on Zeus, not taking that trade. Grr. See if it closes above that origin. Might be the start of something. Haven't looked at hype today. Let's see. So it's bounced off a daily origin. It's gone back underneath it. So the next level for this, if it really dumps, is kind of down around 23. If it takes an absolute nosedive, just looking at all of this, looks like it's building support now. How close is Tesla? Why is Fib Labs? I don't know. I didn't choose the price. Zeus rockets. That's the ultimate way to make it fail. I'll look at Tesla in a sec. See what we've got going on here. It's funny how these ranges always appear quite like similar amount of space. Oh, that was going to look really bad. Let's make it square. That kind of thing. Really need this to swing one way or the other to get a trade. Tesla. Well, broke trend, moved trend, bounced on the daily. Failed to close under the 2 of the distribution range. Closing back up inside the hold. It's pre-market. Everything seems to happen in pre-market lately. You almost just don't get a trade because the entire move happens before the market opens. Still under trend, so it's raised. It's come up in pre-market to pretty much where resistance is. It may just top out here, not so high up. What's going on the weekly? Yeah, weekly has sort of found polarity with the hold level, so it's just staying under it. So if it closes under that, it's becomes a fight between the hold and the trend. And if the trend breaks, then that's the end and price go down. If the trend doesn't break, then the hold will break and then price go up. But it's kind of just standing on the edge. Very much just standing on the edge. The real place that makes this thing take a tumble is under here. So if it closes down under the range trend and under the origin and loses that prior broken trend, that's the kind of place where it's like, okay, goodbye. You're going down. Ugh, not at all. So if you had to be say, completely bullishly biased. Maybe you were one of those people who loves Elon so much that, Tesla, no wrong, can never do wrong. The question is that a higher high? And the answer is yes. So technically it's still in an uptrend until it's not. And that means losing this 222 level down here. If it loses this, which is quite clearly the origin of the entire move to the upside, so this is where you had your break level hit, no distribution back to it, tap, boom. Losing 222 means the entire structure of this thing has changed, but at the moment it's just in a very, very, very barely uptrend. That. Come on. Come to entry. This will be interesting. See if that closes in 10 minutes. I'm just going to go find another refreshment. Come up with a whole bunch of questions. Yep. Yeah, no, I've still got a little bit of that trade open, not much. I've taken most of the profits out of it. So I've got my next TP just set up here at 94. So the way I figure it is we either go down and I can add, and then we run back up to 94 anyway, based off all the structure they created today, or we just go to 94 and then come back down. So just let it swing, really. The amount of money that was made in that trade, if Sol went to 0, it would still be profitable. So it's okay. Not that Sol's going to 0, don't get scared. Maybe $20, but not 0. Maybe 15. Maybe 8. Okay, it gets pretty close, right? How do you find conviction for... yeah, origins are a good one, or just really refined entries. So the problem with refined entries is you can refine them down so much that sometimes you just don't get the trade. So if you're trying to take really, really, really high leverage trades, say on a daily candle like this one, where are we? Come on. So say you're trying to get an entry inside this. You could look at this being your 1 day. Go down lower and just see, do you have any 4-hour structure inside here that's lower down? No, you don't. So go lower again. Okay, and here we go. So you've got this 1 hour in here. Go 1H. Also just look back and see if you've got any 1H origins. So you've got that one there. So 1H. So you might choose to just take that as the long for the daily long. Okay. And you've got 15-man origin. 15-man hold. Getting pretty close to the bottom. So just move. Oops, select. Move the replay tool along. Once you start going down in the time frames, it can get pretty hard to scroll back. So you do have a 5-minute origin in there. Can't really use that hold because it's in the past compared to this 15-minute one, so you don't work backwards with holds. But let's put a origin, put that there. And that's a tested 3-minute origin. So probably not pay too much attention to that, but we'll put this in, which is the 3-minute hold. Okay, so these are our sort of refined levels. If we're looking at taking a high leverage trade on that daily candle, we've got to really wait for the price to come down into these. So if we go back to the daily, Just get rid of that line. Okay. So as you can see, it went all the way down to that 1H origin. So if you'd gone for the greediest point that you'd found, which was that 15 minute, you wouldn't have even entered the trade. If you'd gone on 100x leverage on a daily at the entry, which by the way, just don't do that, you would have ended up completely liquidated. If you'd taken the second entry, being the 1 hour, you would have been completely liquidated. If you'd taken the 15 minute, you would have probably just been liquidated. And if you'd taken the 3 minute or the 5 minute hold, most exchanges would liquidate you at 0.73 because they're worried about, most of them actually liquidate you at 0.6. Even though you think you can get to -1, they liquidate you early because they don't actually want to wear the difference in the loss. And of course, if you'd taken the 1 hour origin all the way at the bottom there, you would have got an absolutely amazing 100x entry and you'd be 500% up. So as you can see, that's kind of how, that's the process. You go through and you find the entries, and then you basically just take the absolute greediest one, which in this case actually means you would have not got the trade if you'd taken that 15 minute. Yeah, and that's high leverage trading in a nutshell, is waiting and waiting and waiting and waiting and waiting for trades and then missing a lot of them. So yeah, I'm sure he'd say something like, don't worry, you know, tax, you don't have to pay tax. Yeah, yeah, liquidation at 0.6% is not uncommon on exchanges, or partial liquidations where they basically liquidate part of your position to lower the risk. It's filthy, filthy, filthy behavior, but it's what they do. So if you're ever trying to work out like where should you have your stop loss, etc., well, there's not really much of a point in having a stop loss that's further down than 0.6% if you're 100x trading, because you'll probably just get liquidated anyway. Ugh. Right. So let's look at how did that look on low time frame. Daily, daily, daily. Okay, so to the right of this vertical line, we want to see what price looks like. So you get a reaction from the daily. You get a drawdown of 0.41%. And then it goes up and say hits the hold or the break 0.64 before liquidating you if you'd stayed in that trade. So if you'd taken it from there on a really low time frame, you would have been able to make about 60%. But if you didn't get out at that 3 minute level right there, you would have most likely got liquidated. Let's see. Yeah, that'd take you at 0.76, so that'd be gone. And then you hit the 1 hour level almost to the cent. And if you're taking the 1 hour level, taking it up to, say, the break, you would have made about another 50% on your money being taken out. Probably wouldn't take this because that was already the touch, although that did end up going higher, and that's just the way it is. You just don't take that risk that that's going to come through. And this being a 1 hour origin down here and that being the reverse 1 hour hold up there, if you'd taken that 1 hour level, as much as you want to run that daily up 500%, you would actually want to be taking profits, or at least some profits here at 145%, because if that level reversed, it could end up coming back down here. And in the end, it ends up going up or whatever to the daily target. And that's here it comes back down after hitting the minimum obligation target, bounces along the daily hold. So the whole concept of hold levels is to break trends. So somewhere in amongst all this, there will be a trend in play. Shall we cheat? I want to cheat. Trends. Hello. Oops, wrong one. Okay. So somewhere along here, there is a trend in play. And it is here. So this hold level wants to break this trend. Surprise, surprise. Went up. In fact, did it actually, might have actually, oh, that was the hold level. It was created. Trend was up here. So it looks like it's working. It's getting through the trend. So now it's in between these two. So if the next candle can open on the top side of that trend, price can keep traveling up until it runs into this hold level in this area, where it's going to try and break whatever the support trend is. So that's something like that. More confidence for them sending price back down. So we've moved quite a way away from the support trend. And so it's anchored, interior is anchored between here and here. So that's once they run into this whole candle up here, up inside this area, it's going to want to try and break this. More confluence for round tripping. So what happens in quite bullish markets is you get fast moves down, candle moves up, closes blue, next one goes up, engulfs it, trend moves, but the fast move down and up leaves a big wick, which means it's always opening over top of the new trend. and that keeps the trend in close proximity to the price as it goes parabolic. And then it does it again, and the trend gets more parabolic, and until eventually you end up with a really sort of parabolic uptrend. And it's really easy to break those because no matter how big the wick is on the candle, if the trend is really steep, the next candle will probably open on the wrong side of the trend. Like if these were trends, if that was a trend as an example, pretty much anything's going to open on the other side of it because it's just getting too steep. And trends can't do this, and they can't do that. So once price just goes up too much, eventually it's on the wrong side. Fast up, break, come down. What level did we just hit? 91.8. It's not bad. What's going on? Should I look at X? It's all about war and oil and boats. Now let's have some fun, eh? Back to the old days. Everything's manual. Yeah, sentiment is. I noticed it straight away today. It was there was can't remember how many, but it was massive difference in how many people started watching the daily update video immediately from release. No, you've got to get back on there and troll people. Let's see, 4 hour, 4 hour, 4 hour. Yeah. Ooh. Wrong tool. I mean, this is just a really good example of shifting, like breaking trends, but going straight into another one, closing underneath, creating an engulfment, and then coming down. I actually took this trade this morning, actually, but I took it as a long. So it didn't. So you had this candle, which was meant to create the range, and then it shifted the trend, but it hadn't fully engulfed, which meant it could potentially come all the way back up here to 92 and would hard close the level. So I thought, oh, okay, well, it's going to want to come up and reject off something. Even if it's going to want to go down, it will want a rejection point. So I basically took a high leverage long right here and just TP'd at the wick there, which wasn't a huge move, but you know, when it was on 50x, it was enough. So, and now it's higher. You know, who knows that it would have done that? You don't know. So, yeah, that has hard closed this level though. So it's really looks like it's going up. Like this hard close, liquidity sweep back into the range, and now it's just sitting here right on the level. It's all the signs right here right now are about let's go for another push. So yeah. See this kind of stuff. 4-month charts worth looking at. You know, when you consider 4 months as a divisible, so like it's a factor of 12 months, it's it goes into a year perfectly. TradingView can't screw with timeframes like this because they're always going to close like every 4 months. You've got to be a little bit careful because you can have a different amount of time in one group of 4 months versus another. But yeah, that's getting into the real fine print of it. But all you really needed to see here was that the candle pushed below the trend. It opened below the trend. It had a hold level. It fully engulfed the wick. Price is going to go down. Like that's when you see this sort of scenario, this is a high probability trade, and there you are, $69. That's your trade. So it's worth poking into these higher time frames. You tend to find things that you wouldn't. They explain why you have these massive dumps, and you go, oh crap, I didn't see that coming. But a lot of it is actually I didn't see that coming. It's I wasn't zoomed out enough in my analysis. So if you just jump in AI and just write in, what are the factors of 12? What are the factors of 1440, which is the amount of minutes in a day? What are the factors of 52? 52 weeks. There aren't really any factors or perfect factors of 365, I don't think, but there are ones that are really close, and that's why you tend to see a lot of cycles operate around the 70-day ranges. So Trump pump roughly every 72 to 78 days, like it's just because they are the closest timeframes that fit into being even factors of the bigger timeframes. So there's a lot of stuff like that goes on, but it's the kind of thing you want to watch for. So also just stuff like this. Never managed to really hard close a high time frame candle above 179. When this one closes in 2 months' time, it'll be a hard close back underneath after all of these ones that have hit it. So you don't know quite what can happen there. Like this is give you an idea of why you can then flip bullish later in the year. If nothing changes, if the price just sits absolutely sideways for the next 2 months, or just screws around in this smaller range within these two numbers, if it doesn't do anything different than that, and then this trend breaks and moves to the bottom, we bounce that trend, the hold is tested, the break is the next level, it's 179. So you can, and there'll be some stupid narrative that every fundamental analysis person will put out there. They'll be like, oh, MasterCard this, Visa that, blah, 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 whatever. But it's just, if that trend moves and the price doesn't change, you can then see either a retest of the next trend, and depending on how long it takes to do it, if it's slow, then you can see prices all the way up here again, and you can see retests of these levels. And that level becomes an origin level at $179, which is just awesome because what's going to happen when you work through that thing? You're going to dump. So, you could get along all the way up into that. You take your profits there. Don't be greedy. Don't try to catch the wick coming through it, and then just watch the thing turn to crap and come all the way down. And that could happen, somewhere 2, 3, 4 months from now. And you can see this chart on TradingView. So no excuses. Add it to your charts. Right, now let's look at 1 month trends. Daily, look at daily. Okay, so what I want you to see here is who's watching. We've got 15 people. Can 15 people hit the like button and tell me they're watching? Oh, we've got 14 people now. Okay, I just offended someone. Come on, you can do it. I'll show you something. Oh, 13 people. Another one left. I'll show you something. If you tell me you're there. Come on. Bots. Yeah, see, everyone's just leaving the live stream. Oh, I got a like. Yay. A world of a shitfluencer. His mum. I reckon she'd be a bit of a crazy one, wouldn't you? You'd have to be crazy to put up with Marty. 10 likes, yeah. Okay. 4-month chart. First trend. Oh, they're back. They're back. Oh, they're gone again. 11 likes. 11 likes. We've got 11 likes and we've got 13 people currently watching, so we need to get the likes higher than the watches. But very first 4-month trend ever. Second 4-month trend ever. Now, once the candle goes below the 4-month trend, which happens at this first line, any point past that, we can look to array the trend. Hello, how you doing? I don't know. I don't know really that much about social media platforms. Up the wires. Sounds good. All right. So we've got a 4-month time frame, right? We've got first trend, we've got second trend. This candle opens where we have this line. So we're going to go down to our monthly. Okay. And we take our first monthly, which is here. So if we just rewind a bit, yeah, go back. Okay, we're here. This is where our 4-month opens. This is where our trend is. We're hovering below the line. We flip over to monthly. Now we'd already be hovering below the line. We go to the first full body monthly close that's below the 4-month trend. So we've been hovering below the 4-month trend for at least a month, and we've closed this candle. So we array the trend, leave the start point where it is, move this to here. We find our first monthly resistance, because this is a monthly trend we're dealing with at the moment, which in this case, the origin's below it, so it's not going to be this origin. Break level back here, the older monthly break level, it could be that, which is roughly the same as that break level for the range above. So we could choose either one of those. Either this or this would be our first sort of resistance levels for this new monthly trend. And when you look at this particular event, it looks like we lost the trend, but what happened in here is the important thing. We moved the trend. And then what we do is we create a wedge. We now have a trigger on the top side and a trigger on the bottom side. Whichever one of those we touch, we're going to target the other one. Right? So that's where we now go down and have a look at what really played out there on a lower time frame. This is the monthly open. We went up, hit the resistance, came down to break the trend. So it's not 100% guarantee, but more often than not, if you touch the trend, you will probably break the horizontal resistance. If you go first up, you will probably end up coming down lower. That's the typical way it works. So, but from when this happened, you could look to either just open a swing trade, and that swing trade might have drawn down into negatives, hit the trend, come up here to hit the horizontals where you took your TP. Or you could say, okay, I'm going to do nothing. I'm going to long if it comes down here, and I'll short it if it comes up here, whichever one it does first. So it comes up here, it hits this, you short. You take your profits at the trend. If it breaks the trend, which is this candle here on the daily, and you can actually refine this to a daily. So if we take it from monthly and we take it to daily, which is this candle, once it closes a candle under this, it's probably going to drop to whatever the next daily level is, which you'd have to come back here to try and find that, but it's probably this break level. Maybe that level, or origin level in there. Yeah, there's an origin level in there. So once it closes this candle underneath the daily, once again, you could say, well, I'm going to just open a swing short and I'm going to TP at these two levels with the full-on expectation it might come back and retest the trend before it goes down, and you'll be in drawdown and don't, wet the bed. You could add at that trend if you wanted to before it came down. This is also, by the way, just what we're looking at right now is actually more confluence as to why the price will probably go up, because we've never retested this broken trend. Or the other side of it is you say, well, I'm going to wait for it to come down to these levels, and then I'm going to start to look to long to come back up to the trend, which in this case, guess what? Here we are. Probably can end up back up here at some point. So that's trends, time, refining them, moving them, what it means. Fun times. $12 likes. Yeah. What a baller. Shitfluencer. You have to say smash the like button. It makes me cringe every time. Actually, I don't watch a lot of YouTube anymore. Almost zero. Sometimes Trade Travel Chill. Although the other thing about the crypto industry is that a lot of people live in Dubai. So with missiles falling, it's pretty quiet from some of the main ones that are out there. The thing that really disturbs me, actually, more than anything else, is the fact that you've got a quiet market in crypto assets, and so the next thing you know, you've got every single crypto influencer putting out news things about Iran. It's like, seriously, just stop going after whatever the engagement narrative is. Like, you're either in this industry because you're in this industry, or you're here to make money, or whatever. But like the moment that there's less engagement in crypto, they suddenly become missiles flying, what that means for Bitcoin, or like US goes to war. What that means for crypto. It's like, it means nothing. It's like, just, yeah. End rant. Stupid idiots. Yeah, cat memes. Cat memes are the best. What do people want to look at? They want to look at data. They want to look at trends. They want to look at origin levels. They want to look at, what do you want to look at? Can a break level become an origin level from the opposite side? Technically, no. But maybe. So here's a theory that we're going to work on later because there's way too much stuff to already get inside this FibLab dashboard thing. But it's about the general concept of polarity. So what makes a break level is that it has a purpose which it doesn't fulfill, and therefore it's a polarized moment. And so that's a break level right there, which becomes an origin level, but never gets revisited, right? So, well, it hasn't been revisited yet, but at some point it will, and if it does, it'll have some kind of rejection. And what makes it a polarized moment is just purely that you've got a break level, it hits it, it never gets back to it, and quite polarized, in fact, because not only does it never get back to it, but it leads on to create a full range engulfment, a complete range to level 4, recovery to level 4, retracement to level 3. This is that thing I've been ranting on about for a while, which is really high probability, is this retracement move that happens in here. And you can see that level was respected, climbs back inside, opens just inside of it, pumps up, taps it, rejects down, finds the hold. Now you've got a new range. Range is now to the upside. Wrong candle. Okay. Pumps up, bounces off the top, rejects off the base of that range. Boom, down it goes. Now here's the thing. If polarity is what makes that an origin, what about this? We hit the base of a range. We do not go back to it. In this candle, we tap, we do not go back again. We epic fall like it's the biggest, nastiest thing that we've ever rejected off. So it starts to make you wonder about is polarity of a level a general idea? And if it is a general idea, then maybe you can create greater resistance on the underside of a break level by not revisiting it. So take that break level there as an example. By going through it like this and not revisiting it by one candle, did that make that break level something stronger? So, because it sure as shit in there looks like it was something stronger. Yeah, so that's so the general concept of can something get created, if you remove the word origin level and just say polarized break level, the question becomes, can you polarize a break level from any direction? Can you polarize a trend? Can you polarize a hold? So if you had a hold level that was, let's find one that got hit here as an example. So hold level exists between these two lines. We hit it, we went down, we came back up, we hit it again, we didn't go back to it, we hit it, massive dump. So when you sort of consider everything through here, it all follows that same sort of guide of polarity. You break a break level, you don't go back to it, you dump. You have a hold level, you hit it, you go down, you don't go back to it, you hit it the second time, you have a big dump. So what about trends? So do we have polarity of trend? Because we had this trend, well, that's on it, that touched it, that touched it, that touched it, that touched it, that didn't. And then we went up. Now, we never revisited the trend, but we broke the trend. Question being, was the trend actually broken by this candle because this candle never touched it? So is that polarity? Maybe. This becomes what we would consider, so sorry, I'll put it back there. This becomes what we would consider the hard close of the trend. With an engulfment, it's going to travel back to the hold. So it's coming back up here to go to the hold. That becomes the break. And then beyond that, you can start adding new trends, etc. But they're not so relevant because that was the break. The target is the hold. Up it goes, right? So that's what happens. But even this, as an example, when this trend gets broken, this doesn't revisit it. Does that mean that this trend becomes polarity? And we worked through that trend and bounced off it quite nicely. So, yeah. The question you asked is a thing that I go over a lot in my mind. Can you create origins from the wrong side? Maybe. Can you polarize trends? Can you polarize hold levels? Can you polarize anything? Because levels are just levels, right? So every single thing on the chart is either going to be categorized as support or resistance, and then there's going to be whatever the state that it's in, and the state is dependent on the time frame. So when you have a level that exists across multiple time frames, it can have different states because it may have been revisited or not revisited or broken or not broken depending on the time frame. And that's where the rabbit hole gets really, really, really deep, because you might have like an origin level that exists. What's this? Break level. Well, that's the bottom, so it's going to exist on everything. But you might have like a level like, say, 95.234, which exists on something like 70 different time frames. And if you look at 70 different time frames, untouched, 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 untouched. So all of these have broken the level and they haven't touched it. But these have not broken the level. So at what point is that level truly polarized? Does it require every single time frame to meet the same condition to polarize the level? Or does it just require the biggest one? Because sometimes the biggest one closes before the smaller ones, depending on how they overlap. So anyway, yeah, rabbit hole stuff. But that is the kind of thing we think about, or I think about. Yeah, or exactly, a reverse hold level. It's a polarized level. I mean, a reverse hold level is just quite simply a hold level where price closed on the other side of it. So if you can reverse a hold level, why can't you reverse a break level? Why can't you reverse an origin level? Why can't you reverse a trend? And we know trends get reversed because you retest trends and the price bounces off it. Same thing with range trends. You can reverse a range trend. The question is, how does it become stronger? Like, what is the indication that the level is actually going to create a larger move to the upside or the downside? And I think for a trend like this, as an example, to create a bounce like this, and across all the different time frames, because they all have something, like there would have been a 3-day hold here, or there would have been all these different reasons why price bounced. But from a trend perspective, did this trend bounce quite purely because after it was broken, price never touched it? Is that all it takes to polarize a trend? In which case, now you know which trends you should take longs on for a retest once they're broken and which ones you shouldn't. Because if the price just continually hugs the trend, it's possibly not support at all and it's going to break the trend. So, yeah, there could be some future things that we figure out. So even that one. Look at that little touch. From just yet again another prior broken trend. I wouldn't consider this one broken because the body is on it. And I would consider this one the resistance trend because it never got broken. And there you go. So whack, we hit that. We dump. We bounce. We bounce. We continue until we hit the resistance again. It's just lines, on a chart, but this line appears to be polarized from the perspective that it took time to get back to it, never went straight back to it. This line and the one below it appear to be polarized for exactly the same reasons. So if you just longed here and TP'd here, you would have been long in a trend or the reverse retest of a trend of a polarized moment. It doesn't really explain why that rejected the way it did, because every one of these candles did touch the trend. But then if we bring the horizontals into it, we've got touch, 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 failure to, dump. So there's other reasons why. And then if you went up higher and refined it, you've got a whole candle, touch, failure to, touch, touch, dump. Look at that annoying trend. So it held the price down that whole way till it broke there. And then when it broke, it would have targeted first that break level. Second, it went to that break level. Hard closed that. All the hold levels have been tested. So it probably ran into an origin, which would be this one. This one. It must run into something else. So it actually hard closed over the origin and then trolled it, went down. Oh, break level. Love it, eh? So this was the trend break. Wicked up, created an origin, hard closed over the origin, never retested it, so it's probably going to come back down. Went up, hard closed the next one, did retest, bounced, hit the main origin, hard closed over it but closed under the break, failed, created the distribution range, and went down to do the retest it left behind. Down here. Hit the 4, bounced back to the 3, said goodbye to the range, broke, went down. Yeah, I mean, at the end of the day, an origin level is just a break level. So we pumping. We're at 92.2. Can we just hurry up and get to 94? An origin's just a break level, and break levels get retested. Origin levels will probably get retested at some point. I think we worked it out the other day. We went through all the BTC break levels that exist, and there's a 95% chance that break levels get retested. So when you consider the average trader gets it right 5% of the time, and really good ones get it right 60% of the time, and a break level gets retested 95% of the time, you got to wonder how many of them pay attention to that. So BTC is back to 73. Yeah. Do you reckon if I go to bed, I'll wake up with a TP? This is lower time frame liquidity. So all of this is quite new, and the price has been ranging down like this. And you can kind of see, like, as the price starts going down, people start to get confident and they open shorts. These people more confident, they're opening higher leverage shorts, and then these people are opening, sort of like 10x type shorts. And once enough of that is made, price uses it to move up. Same thing here. So really just looking for it to come up here into 94. Not too greedy. So over on the high time frame, it sort of looks like you've got this gap, but that gap is getting filled with this lower time frame liquidity. So it'd be good to just get up there. Job done. Yeah. So if a level gets retested, I guess the wording of that itself is tested, right? So what's it being tested for? It's being tested to see whether it is either truly broken, so therefore resistance, or is it support still, and can it be recovered? And I think polarity would be something like, say this level up here at 118, break level, got broken, got tested, it dumped. So therefore that would be polarity, simply because the price went away from it, never went back to it. If it comes up here, it's probably going to have some kind of rejection. It may not be a huge one, but it would be a tradable rejection. And then there would be break levels to the downside. Let's find one we've gone through. Look the other way, don't we? To go back a bit in time. Okay, so let's look at this level. Pretty good example, actually. Somewhere down here. Where are we? Here we go. So hit it, hit it, hit it, hit it, bounced, big drop, didn't go back to it, recovered it, retested it, big bounce with a retest. So important break level. This one. Okay, hit it, hit it. Well, actually, it was already in an origin level because of this. Hit it, polarized it, went up, ran into something up here, hold, probably that, ran into that, came back down, hit it, hit it, hit it, polarized it, had some kind of big bounce, ran into the hold there. So if we look at that on a lower time frame, let's just see how that went. Did it go up and then down, or down and then up? So daily 15-minute. Which day did it first touch it? So this was a origin level at that point, and then this was the first day it touched it. Yeah. So it danced along it for a little bit, exploded up, hit the hold, dumped down to break it. Right, so yep, along, boom, down. That same level, where were we? Yeah. And I guess this is, so here's the argument for can it be polarized from the other side? Once it hit that hold and it broke that level, this potentially polarized that. So maybe. And then we went up, hit it, closed underneath it, big dump. So that's very, very, very possible. 100 today? Yeah, probably. Maybe. Don't know about whether it's 100 today. It's definitely on the list. 100 is on the list. You're welcome. Yeah. So that would be, this right here would be an example of, can you polarize an origin level from the opposite direction? Well, maybe you can. Origin bounce, up to the hold, comes down, goes below the level. Does that reverse the origin? Maybe. That's the rejection. What's down here? So the question is, we have to come all the way back into the past, and we have to say, what actually did that hit? So it's got to be something in here. And there is a hold here. There is a couple of origins in here. So there's this one, range hit on the daily. It's probably that one. Very close. So go back to the future. Never got to any of those. So what stopped it? Had to be something higher up. So it could be that. That's an origin. That's a tested break, tested hold level, tested hold level. That's a break level. Yeah, break level. Don't know. Oh, there's an origin in there. It's got broken, covered, hard closed. See if it was that. Maybe. It kind of went lower. It's just a break level. Yeah, I don't really know what exactly that hit on this time frame anyway. Could be that. It's getting very old. But that looks like a pretty epic rejection level. And that's actually another example of what you've just talked about. Like, here's your origin, polarized to the upside, polarized to the downside, huge rejection. So that's became pretty big support. It's not quite what touched though. Yeah, don't know. You have to dig later. Yeah, I think I'm looking at 100.4 is one of the key levels if we manage to get back up above this break level. So that one in there. They have created this though, so just good old 99.933 just before 100. So that was a more recent creation. Yeah. I mean, there will be an exact reason for that price there. It's probably just not on this time frame. It's kind of funny this level here at 89.554, which has done this perfect little bounce off here. Whatever that is, comes all the way back into here. Yeah. It's the 1.0 of a range candle. Which leads to, funnily enough, 92.3, which is about where it is now. Oh, so many levels. There you go. Let's find an emoji, eh? Let's put the alien one on there. Yes. So there's the answer to that question someone asked me about where, like, when does a range become invalidated? Don't know. I used to think that ranges were kind of a one-time thing, but I see so much stuff these days like this, where we bounce off a range level from miles in the past and we move to a target, like a replication of what happened once upon a time in the past. Even though we've hit the break level, even though we've gone below it, all that kind of stuff. So part of the cool thing about the FibLab dashboard that's been set up is it just it databases everything. It records everything, like timestamps for every single type of move, and eventually it will really allow for this kind of stuff to be unraveled. We already know that if the price opens between certain brackets, it's going to very likely move between those brackets, like down first then up, or up first then down. But it's effectively, it creates support and resistance based on price and time. The thing is, how do you give priority to the different ones that already exist versus the new ones that get created? And when we figure that out, it's going to be pretty awesome, because you'll be able to take higher risks on things. In the meantime, who cares? You just make your 1, 2, 3, 4, 5% a day, whatever, and compound it. How is ARK doing in its little pullback? Hey. Good. Okay, so the question now on ARK is, do we wait 5 hours and 41 minutes before we open a trade and take it back up to the hold? Or do we ladder in now, because it still has this to retest down here? And it has a reverse hold there for support. So it may break the origin to come down to these lower levels, or it may bounce from there straight up. But it's got 5 hours and 13 minutes to go on the candle. See what it's doing on a lower time frame, eh? Break. Origin's kind of already acting as resistance. So I think what we do is we wait and we see whether it is greater than this. Wait and see if it closes over that trend. Yeah, a raid trends are good when you've got, particularly if you run into things like doji candles at the bottom of a range, or if you're looking at something and you're going, you've got this annoying 1 month doji, or you've got this 1 week doji, or 1 day doji, or whatever, and you're going, I don't know whether I should attach to that trend, or attach to that candle for a trend, or you might have something, I think, I'll draw it. So you might have a pattern like that at the bottom, and you've got these various blue wicks, and when you try to put trends through here, it all kind of looks a little bit messy, and you don't really know which one is actually the right level. But if you were to take that and look at it at a higher time frame, it would just be 1 point. And that's sort of the thing about time arrayed trends, is it gets rid of the noise that sometimes exists on whatever time frame you're really trying to trade on, and it gives you just like 1 point. That's where I attach the base of the trend. But you also have to look at it from a perspective of, if I end up going past a point, so where was that chart? Wherever that chart was. Okay, I give up. If you go past a point where you can't put a trend on it anymore, no, I'm wording that badly. Let's start again. In other words, sometimes you've got more information on the chart and you stop early and then you array it. Because if you went to a 4-month chart like this for ARK, well, pointless because it hasn't been around so long. Let's go back to Sol. So if you went to this and you took your first 4-month trend that ever existed, it's that. And obviously the price took off. But in the time, if we'd arrayed that down to a monthly, so if we just went then to 1 month and just took the first monthly candle that happened after it, which was that one, you could long that. That break right there. And it had already tested holds, so it's probably going to come up here. So it's kind of as easy as that. But where it can get a little bit trickier, let's find a scenario where it's a bit hard. If we take that forward till now, what you don't want to do, okay, bad example. Try the bottom trend. Okay, so, no, okay, bad example. Sometimes what will happen is you'll end up with like the ability to move it to there, which you say that was closed. That doesn't really help you. You're not going to find a 1-month trend by just moving it to the bottom of the next 4-month candle when this candle's not gone below it. So it's really helpful when you've got this kind of thing or this kind of thing, like where the price is poking through the trend or on the trend. So if we took just those two lines and then went down, now you can find your proper anchor point on the monthly, which is the top, so it's all the way up there. It's the first hard closed candle. This one there. So that's your most accurate monthly trend currently. It's down here. We're pushing up. So now we could run a monthly array off here and go here, 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 here. So that's our top. And so we don't actually have a monthly downtrend yet. So that becomes a little bit problematic, because how do you know if you're breaking a trend if you don't actually have a candle that you can even attach it to that's closed? So what you can do is you can go backwards. So we take that here, 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 and stop, right? And then drop it down a time frame. So we could look at 1 week, which doesn't perfectly add up. But what it will do, you could actually drop pretty much anything down to a daily. But we just go here, here. That gives us our proper 1 week. Then we get this interior 1 week, and that's pretty useless because it's just straight through there. So we can try to take it to a daily. See if there is a day above that week. And there isn't, so that's, again, pretty pointless. So you can't really do too much from that trend. What you can do is you can run down here, weekly, weekly. Okay, that one you can take to a daily. And that'll give you a proper daily anchor, which is that candle. And if you'd done that on that first daily close, that would have been your rejection. Okay. So then you can take that daily, run it to there. And there's lots of things that have gone on in this, but that basically shows you now that we are at that, we're pushing onto that daily trend. And so we could take that now to a 4 hour and see, do we have a 4 hour? And we do. It's getting kind of small now, right? So you've got to check any candle ahead of the anchor, which is this one. So our 4 hour trend is actually here. There's your rejection off your 4 hour. Pretty big rejection, first touch. And then you got to run your 4 hour off here. So it's getting a little bit tight. 1, 2, 3. That's your 4 hour. Okay. And there it was broken. There it was retested. Probably hidden over here somewhere. And you can take that there. You can see how accurate these trends are. There. There. Okay. There. Finally there. And so we're about to do the first touch of that. And you take that one on the 4 hour. Then you can take this down to the to the hourly. And we're starting to get pretty small now. There's your hourly. Go down to the 15-minute. So we're breaking trends. There's your 15-minute. And there is your 15-minute trend resistance. Where did we start that? 4 months? Yeah. It's your 15-minute break. There's your 15-minute range break level that got recovered and hard closed and possibly becomes polarized if this candle doesn't touch it. Meanwhile, we've got that 50-minute trend, which is rejecting the price. So support, reverse level support, resistance it's trying to break, resistance it's trying to break. Anyone think that's cool? Or just super geeky? Yeah. You're welcome. Might be bedtime soon. Mm. So if you are into really, or want to be into really high leverage trading, time array trends is definitely something you need to learn. It's the ability to get those just perfect low time frame entries off a trend. Yeah, it's always the way, isn't it? You get all of this liquidity cake gets baked while us Kiwis are awake, and then New York comes along and takes it. So normally our TPs come while we sleep. It's this is just a scary looking low time frame liquidity chart. Look at it all down here, and yes, people are opening shorts, and they're probably going to get taken because these are levels that price is hitting. But once it's done its job, once it has taken those things, look at all the beautiful, juicy cake to the downside. It's sitting and waiting. Just need that sentiment to really flip bullish and everybody to start piling in. Yeah, it's pretty likely we'll head to the 1 day trend. We bounced off something on a 1 day. We do. Yeah, pretty likely. We're already pushing into the 1 day trend there. The thing that's not good about what's going on the 1 day for Sol is that it hasn't actually retested the trend, so it's going to run into something. Whether it's this range trend up here that will send it back down to here. Something will happen. And that's just the normal daily range that's in play, which gets you up to 100, 97, 91, which was our resistance yesterday. And there'll be confluence, in these levels. So we've got a bunch of big fat origin levels that are, so they're bullish, so that they were support origins that the price has been under. So you'd have to look at the 52 day. So all of these ones, like the 2 day, 4 day, 6 day, 13 and 12 are probably broken, but you could look at the 52 and the 55 and see whether they're broken, which means we might be able to recover that level. So it's at 98.339. Oh, here it is. Widget button. Closest touch origin above. Where did that go? Oh, widget button, no work. Dev. broken, 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 not. So 52 and 55. So it's got 38 days, according to that. 38 days based on the 52 to get back above there and stay above there. And 25 days based on the 55. Here's your trend. It's not too hard to see what's going on. Find your first horizontal resistance. This is why it's really, really easy to go to 100.4. Excuse me. Because we dived from the top side of this break level to the existing trend. We're pushing back up. We have 25 days to go. If this gets back up above that break level in the next 25 days, the next resistance level, not hard closed at this point, is this origin at 100.4. And that's why that's a pretty clear and obvious level, because it's just a trend bounce back to horizontal. Then you've got above that at 112 through to 118. You've got a reverse hold, which has been closed inside of. And if you keep moving from there, you're talking about, bigger break levels basically, but that's yeah. Let's hope it continues. So should we hit a 1-day trend? Yeah, we absolutely should. We should probably break a 1-day trend too. Then should we continue on to bigger targets because we've bounced off bigger trends? Yep. And then once we've done that, what happens? We'll probably dump then, and it'll be when everybody thinks that it's a super cycle and we're going to the moon, will be when that happens. Yeah, so this might as well already be breaking out. It's hard close this break level. Retested it, bounced. So what you got to do is you got to figure out what time frame is this 89 level, because it's a 1-day here. We have a 1-day prime day on the exchange tomorrow. So that could be interesting. Let's have a look. $89 flat. Here it is. So it's a 1 day and a 2 day. Both of which close in 12 hours, according to that. Yep, 1 day, 2 day. So all we need is a 2 day close above that level and we break the 89 origin. And we pump. Ah, here's the kicker. The 1 day opened above the level, the 2 day didn't. So not 12 hours, 12 hours plus another 2 day candle up here. Positive 2 day candle. Filthy, 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 filthy. What's this? Right. Well, I might go to sleep. We can wake up with profits. Fun times. Oh, it's nearly where I want it to be. This is what happens, you go to bed and then it hits your level. Alright. I've already made my 1% today. I don't really need more. Okay. Good night, everyone. We'll see you all tomorrow, probably in the Discord or somewhere else. Who knows? Catch you again.